bad actors on the ACH side. That is really something that I think if your listeners will, kind of make a deal with themselves to do is, kind of go on your banking app and just take a look through.
Tom Hill and Chad Stewart. He's from Ives Bank. I'm a commercial real estate broker holding CCIM and SIOR, and which CCIM is a certified commercial investment member. It's called the PhD of commercial real estate. And the second one I got thereafter, about 10 years later, was SIOR, Society of Industrial and Office Realtors, and there's about 4,000 of us around the world. So we're talking to Chad Stewart. Love talking to him. He has addressed us on our biannually panel out at the Farms Country Club. Did a nice job, by the way.
Thank you.
You haven't shown you've only shown a little bit of your sense of humor here so far. You were going to tell us a good story. We talked about a crash in the 90s where a lot of the banks went out of business, and I remembered a company that I worked for because of my CCIM designation, J.E. Roberts, and I said I survived on selling trash and tragedy. So you had a funny real estate story, an interesting one, based on J.E. Roberts, which were big kind of private banking companies that took over the loans and tried to work out the banks of their trouble?
Yeah, they were like a property management company based out of Virginia that basically a lot of the Karks and the recalls of the world, the companies that were working out lots of loans.
For the banks and the lenders, and the borrowers, both.
They managed a bunch of properties. But I got married in 1992, and my wife and I, we had went into a binder at the time, which I don't know that...
to hold a property.
It's to hold a property.
It's like a letter of intent that they call it today.
And it was a property that was being managed by J.E. Roberts. It was a condo in Fairfield. And so we were married on the 27th of June, and I had given my landlord notice that we were moving out at the end of July when we got out of our back from our honeymoon, and we had set everything up. The mortgage was in motion. We were enjoying our honeymoon, and we came back and picked up the phone and said, we're ready to schedule the closing. When can we close? And J.E. Roberts said, oh yeah, everything's set. We're all set for you. The only issue is we've put a family into the condo that you're going to buy, but don't worry, they'll be out by November. So you can either close in November or you can close subject to the rights of tenants. And at that point, I had 2 weeks left on my lease in my place, and I had to find some place to move. So I told the people for J.E. Roberts, I said, listen, you're going to find me a place to live because I've got 2 weeks, and you've kind of done me dirty here with. So they actually found me a condo in Black Rock section of Bridgeport. To live in, which we did for the next 6 months. So,
and you ended up though with the right condo eventually.
We did not. We ended up being so disgusted with the process that we went and we bought a house actually in Stratford, Connecticut at the time.
Nice town.
Yeah. We bought it, not to get too far afield, with one of those Norwest mortgages where you could kind of check on your payment coupon how much you wanted to pay. Do you want to skip a payment? Do you want to pay it?
Wow.
It was the Wild West. And of course, as you know, that led to the big mortgage crisis towards 2008, 2009.
Well, this all talks about the world of finance, and you're really not far afield, because if you're a student of the game, you learn about all these different kind of financial packages, whether you're selling them, whether you're selling a building. It can't hurt. And my intern is going for finance and business up in New Hampshire, and showing him around the real estate business is, this is all finance. We're part of finance and the financial system, et cetera. So talking about the Norwest and pick your payment. There was a little commercial for a car now. They're doing that with a new car website where you can pick your payment and negotiate the car on the website and lower your down payment. So nothing new, creative financing. Love it. All right, so I'm going to flip back over to some other...
Next sign of the apocalypse. That's what that is.
Nah, you got to be positive. That's why we voted for President Trump. Okay, so let's talk a little bit, because I don't think a lot of people understand this. Let's talk big banks and I think you call them money centers. Are the same ones? J.P. Morgan, the big whoppers in New York City that are worldwide banks, and the ones that are too big to fail. Let's talk about like J.P. Morgan, run by Jamie Dimon, who's the media goes to him for advice, I suppose, versus Ives Bank and Martin Borgato, who's your talented president. Do a little comparison to what a J.P. Morgan might be like to run and how they do business versus Ives Bank and Martin Borgato, who are a community bank.
That's a great question.
Do you need another break?
No, I've never sat in Jamie Dimon's office, so I'm sure that it's a great one. The money center banks, that term dates me because that used to be Manufacturers Hanover and Chemical Bank and Barclays. There used to be a bunch of them, and now I think they've all combined into one or two. But the too big to fail banks, or there was something once upon a time called the Glass-Steagall Act, which basically forbid commercial banks from doing investments and for their own account. And there was kind of like a separation of church and state there. And sometime in the late 80s, early 2000, late 90s, early 2000s, that was more or less repealed. And now, if you were to look at the earnings of a Chase, they make the majority of their earnings from securities transactions and things other than banking.
That's stocks and bonds and trades, correct?
Or private equity investments. You can name all the other things that have to do with financial engineering, and that's where they make their money. And quite frankly, that's where they got in trouble with the swaps and the counterparty risk back in the old days. So community banks are very, very different. Community banks make their money. 90% of their money is made on their net interest margin, NIM, which is the difference between what they pay for deposits and what they get on loans. I mean, we as a community bank have both commercial loans and residential mortgages as part of our portfolio. We fund them with our deposit base. So, it's kind of an old school belt and suspenders type of banking. It's not sexy. It's blocking and tackling every day. So very, very different. And although I will say that the Federal Reserve in New York just invited Martin to be on an advisory board. So I think that
your president, yep.
Yeah, our president,
yes, he bosses me around too.
So I think that what that reflects is that even the Federal Reserve appreciates the opinions of nuts and bolts community lenders like ourselves.
And it's from my research that over the last 3 or 4 years, it appears that the regulators and Congress have gone more towards giving more flexibility to the community banks, as a lot of them faded because the big banks got so big and bought them up. So I think your industry, and we're customers with Ives as well, has gotten more favorable treatment from the regulators and the government competitively wise, so the big banks don't put you all out of business. Is that too brutal?
Well, I mean, I think, and I'm not a regulatory guy and I don't deal with the regulators on a regular basis, but the rules are pretty much the same, which is unfortunate, right? The larger banks get treated kind of similarly, with the mutual regulations, Reg U, they're pretty much the same across the board. So, banks in general of all sizes still spend way too much money on compliance and audit prep, and that takes away from being able to serve the community. So hopefully, as time goes on, those regulations will get peeled back, especially for the stronger banks that aren't taking the crazy risks out there.
And then we get into fraud. And at your annual meeting, which I'm invited to every year, which is riveting in June, and Martin Morgato, our president, gives the report. Interesting on the expansion of the team to beat fraud and keep your customers safe. Shocking. A lot of money to be spent in that department, and you can't get creative or new tech people fast enough to avoid the fraud and the people that are trying to tap into the bank's computers and steal the depositors' money. That's for any bank.
Right. Yeah. And listen, every bank has got issues with fraud just because, where do fraudsters go? They go to where the money is, and where is the money? Well, it's in banks. So, but as much as we do to protect our clients from fraud, many of the wounds are self-inflicted on fraud, and I think what we have to do is do a better job of informing our clients, or in general for the banking industry, informing clients on what protections there are out there for them. The positive pay, where basically every check, you submit, you the client submit a register of the checks that you've written, and that gets set off against the checks that come in for negotiation. And if something's changed, if a payer has changed, if a dollar amount has changed, that will trigger a reject, and you'll have to take a look at it and make a determination whether you want to pay or not. So there are things that are out there. It just takes effort on both sides. And, I think to some degree, I'm not, clients expect the banks to protect them, and it's got to be dual.
Without question. And again, I watch Ives Bank because I'm on the advisory board, and I've been there for 20 years. I wish I got on a bank board as a younger man. But with that said, to the audience, you want to pick a bank that's really cautious and really continuing to have the latest and the greatest in fraud protection. And then as consumers, teach your kids to read the Wall Street Journal. There's been unbelievable stories in there of how to protect yourself and change your password, and how to do a better job on all that kind of stuff. That's a whole other show.
Sure.
Would you like to ask me? Go ahead.
One of the things, just the tip to throw out, and I'm probably going to get my time frames wrong, but they're at least illustrative in that, one of the big weaknesses in the system is ACH, which are automatic clearinghouses. Your gym membership, your whatever, it gets automatically debited from your account. As a consumer, I believe you have 30 days to reject an ACH, but as a business, you only have I think 24 hours or 48 hours. It's a much tighter time frame. So if you're not checking your accounts as a consumer or as a business daily to look for
Mistakes, fraud.
Yeah, I mean, bad actors on the ACH side, that is really something that I think if your listeners will, kind of make a deal with themselves to do is, kind of go on your banking app and just take a look through. I've discovered on my account, you don't understand how the bank doesn't catch it. And this wasn't Ives Bank. This was a different bank. But there's a charge in Fairfield, Connecticut, and a charge in Rome on the same day on the same card. I mean, how does that not get
Flagged? Or yep.
So you have to check, and you have to do it every day or every other day at the most, just to make sure that your accounts remain secure.
Yeah, I think you have to really be on it. I mean, my personal policy, when people want to take a dues out of me every month, I won't do it. I don't want anybody tapping my credit card. I'm not signing up for anything like that. If I can't pay by the month, or my coach has a fabulous, I get coached as a real estate broker, and he's got a fabulous website that you can belong to, and he wants to tap, I don't know what it was, $100 a month out of it. I said, absolutely not. And I said, I want to send a check. And his salesperson goes, we don't take checks. I said, well, then bye. And sure enough, the coach called me and said, what's the problem? I said, let me just write a check for the year. That's the end of it. You're not tapping into my credit card every month. So just because I don't want the trouble, I don't want to have to check it. And you're right, you bring up a great topic. So to the audience, watch out for fraud, and personal bookkeeping and oversight, I imagine, should be A on your list.
From what I hear, it's not too easy to get you to reach into your pocket either. You got those alligator arms, when the bill comes around.
Okay.
That's what I hear.
Here comes the sense of humor. All right, Alice, get him off the stage, would you please?